Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Friday, February the 20th. Guys, we made it to Friday, everyone. Yay! Friday, right? Well, really good to have you here. And if you're here this morning, I would love it if you would say hi in the chat, drop your name in there. Let's get to know each other. This space I have created to help traders of all levels, but I especially love helping newer traders. If you are trying to get started, you don't quite know where or how, that's what this space is for. I'm trading live in front of you 5 days a week. Monday through Friday, and I'm talking through market analysis. I'm talking through why I'm taking certain trades, and we are trading together. We've got a great win rate on the channel. And so if you're here, say hi, drop your name in the chat, and let's get to know each other and let me help you answer any questions that you might have. All right, we have a lot to talk about today. We are looking at lots of big data that happened. The biggest thing that happened today is the Supreme Court dropped the ruling on tariffs, saying that the tariffs are not legal. President Trump's tariffs are not legal. So this has sparked a reaction in the market. It's been slowly climbing ever since that reaction. And I'll show you what that looks like on the chart. Give me just a second. All right, let's scoot out a little bit, zoom out, I should say. So here's the open. We opened immediately with a push up, and then we got this big pump right here when the Supreme Court decision came out. And then it immediately pulled right back down. And ever since then, it's just slowly grinding upward. We're up about 0.6% right now on the day. And so that's the market is responding favorably. Now, here's the other thing that's going on today. We've also got a ton of data. So we had PCE today. Remember, that's personal consumption is what the consumer is spending. That is what the feds like to use as their gauge of inflation. That number was up by, I want to say, 0.2%. So that was not great because number one, we don't want to see inflation increase, but the more inflation increase because that lowers the odds that the feds will actually cut rates because the feds have what's called a dual mandate. They're mandated to maintain prices in the economy, and they're mandated to maintain labor in our economy. And so a lot of times those two goals are at odds with each other. And so the one tool that the Fed has is interest rates. They can cut or raise them or keep them the same. Is quantitative tightening, quantitative easing, meaning in essence, they can print money. In essence, that's kind of what it means. So these are the only tools they have to work with. But the market wants free money. The market wants the feds to cut rates, to continue quantitative easing, to continue pumping money into the economy. Well, what happens when we pump free money into the economy? Anybody? Prices go up, right? As you pump free money into the economy, the dollar is not worth what the dollar was worth before, and all the prices go up, which increases inflation. This is the problem, right? And so the Fed is constantly in tension with their goals. So what we need is to analyze the market based on this data. So PCE came out. GDP also came out. That's the gross domestic product. That is all of the United States. What we produce is the gross domestic product. Now, that number came down surprisingly by a good bit, 3% from the previous reading. So that's not good. We don't want to see the GDP dump like that. Not good for our economy. So those are the major data points. There are two other things going on. The other really kind of big thing going on here is there is tension between the United States and Iran. And we're starting to get some saber rattling going on. We're starting to hear military action is possible. We're hearing President Trump say this, that if Iran doesn't settle down basically and make a deal, there's going to be some military action. We've already got ships in the area in the Strait of Hormuz. So we are not uh, that's very, that unsettles the market. When you see oil rising, and we are seeing oil rising, you know that there's usually trouble in the Middle East. And there are other reasons that oil rises, but let me say it this way. When there's trouble in the Middle East, oil is going to rise, and oil is rising. So the last thing we've got going on today is OpX, options expiration. This is the monthly expiration. It happens the third Friday of every month where options expire. We talked about this a little bit yesterday, where we said that options have expiration dates. The SPY, for example, has expiration dates every single day. We have an expiration on the SPY, but there are still weekly and monthly expirations. Back in the day, that's all it was. I can remember when we went to weeklies and we thought that was the best. And back in the day, it was only monthlies. And so big money still trades that way. They cannot, the one of the main advantages that we have as retail traders is that we can get in and get out really fast. We can be light on our feet, and we take advantage of these tiny little moves. That's my strategy. Take advantage of these itty bitty little moves, get in, get out, boom, grab some money and hit the door. That's my strategy. That is one of the only advantages that retail traders have. We are light on our feet. We can move in and out. What the big guys have is a big old cruise ship. They can't just turn a 180 in a second like we can. They have got to turn this thing slowly, very, very slowly. So they will park their money at monthly expirations, and they will move it around usually about every month, but it takes them days to get in and out of positions, and sometimes weeks. Because think about it, if the big institutions were to drop a huge sell order on the market, or even a buy order, either works both ways. Let's say they were going to drop a big sell order on the market. Boom, they're going to sell millions of dollars of SPY. What happens to the price of SPY? Goes down. That works against them. They don't want to sell down here. They want to sell up here. So they've got to sell in little bites. Well, they're not little to us, but for them, they've got to break it up into little bites, and they've got to do it over time to avoid, boom, either crashing the market or spiking the market. If they are trying to buy, they certainly don't want to blast a big, multi-million dollar order out there on the SPY, because boom, it goes up and they can't get the price they wanted. That is the main idea behind how big money is moving, and also what happens at options expiration. So when big money needs to get out of their positions or reset new positions, what do they want? Well, they want the best price possible. So you will see around options expiration, sometimes it happens the day before, a couple of days before, the day of, you will see sometimes the market's doing these wild swings, up to the up, down to the down, and they will swing the market in order to get the price they need to get in and out of their positions. Now, I realize what I'm saying is I am accusing the market of pure manipulation, and I do accuse the market of being run by a bunch of crooks who are manipulating it for their own gain, and they are greedy. But you know what? That is the game. So, we can say, I hate you, all you big guys, your game sucks, or we can follow along behind these whales, and we can get our little piece. We can be the little krill that follows the big whales, and we can get the crumbs that they leave behind, because their crumbs are massive. That's kind of the strategy that I've settled on. And we can belabor the fact that there are a bunch of crooks out there, and they are, and they make me mad. And some days you will hear me get on my soapbox. I get mad, but that's also opportunity. We can watch their footsteps. Big money leaves clues, and we can watch their footsteps. We can make money behind them. So that is all of the detail of the data that we're looking at today. It's a lot to parse through, and the market is responding at this point in a bullish manner. All right, looks like Roberto Gaspar is here. Good morning, Roberto. And Gavilan is here. Good morning, Gavilan. Thanks for joining. And if anybody else is here, please drop your name in the chat. I'd love to meet you, get to know you, answer your questions or comments. All right, so now that we've gone over all of the data today, it's quite a bit. It's a big amount to process. Supreme Court rulings, PCE, GDP, the mess going on in the Middle East, and OPEX. So lots of stuff going on today. And I expect to see some swings today. Now, we don't have to. The Supreme Court ruling threw a wrench into what I was expecting to happen today. What I thought I would see today is a little push up and then a strong dump down based on the negative data that we saw. But the Supreme Court ruling has changed that trajectory. So we are watching it just slowly climb all morning long. So now that doesn't mean to say that we won't get some wild swings. We do still have OPEX, options expiration. So we could see a big drop to the downside. And when it comes suddenly. Usually on these kinds of days, when the drop comes, it comes suddenly. So I am kind of waiting for the other shoe to fall. And let's see if that actually happens. All right. So I've taken a couple of trades this morning, nothing big, a couple of small winners. So I would like to take a couple more, but right now we're moving just a bit slowly and I'm waiting for direction. So again, it's been this kind of slow climb. Right now, we're not getting much farther than 689, which is our recent high right here. On the SPY, we hit 689 on this pop, that's Supreme Court news. We hit 689 and we immediately retraced back from it and kind of did up and down for a minute. And now we've kind of slowly been doing this little grind. So right now we're slowing down a bit. So how do we trade this? Well, we've got to be aware of the levels. So far, this is the high of day. We got to watch that. I have an overnight high right here at this yellow line. I have yesterday's high of day right here at this blue line. I have the opening range high right here at this green line. These are some levels that I'm aware of at the top. And then we've got levels at the bottom as well. We've got the overnight low right here at 681 on the SPY, the opening range low at the same area, and the low of day from yesterday roughly in the same area. So 681 is kind of being defended 3 times, right? So now basically the range so far today is 689 to 681. And we're going to have to watch and see what happens. If we come up and break this high and start heading up for another leg up, we can take calls. We're over the VWAP. It's sitting right here at 686. We can take calls. If we get some sudden drop to the downside, we can take puts. So we want to be watching where this downside is going to lead us. We are getting some negativity here, just a little bit, nothing major. All right, I just need to do something real quick here on my account. Okay. There we go. We're getting a little move down here. That's nice. Very good. Let's see if we keep going here. Breaking through the overnight high. Very nice. And getting a little bounce at the overnight high. Also getting a nice little rise in Bitcoin, which I was happy to see. All right, so we have not broken through the overnight high. Do you see how it's trying to defend that here? Remember, that's the yellow line right here. So we've not broken down through that. If we break down through it, we could consider puts, but this has been really slowly moving down here for a while. So I might be careful there. We are breaking through it. And the VIX has given us a little push here. So we hit a low on the VIX at 18.7, and it's now moved back up over 19. Now we started the day up at 21. So take a look at this. I'll show you. Because we opened the day with a gap down. So here's our high of day, 21. Okay, nice drop. I'm going to load some puts here at 688. All right, little bounce back up through the overnight. So they are trying, looks like they are trying to defend it. Let's see what happens. You see we hit it a couple of times here. Bounce up, came down, up, down, up, over, and back down. So let's see. BD is here. Good morning. So good to see you. Thanks for saying hi. We are coming down again. So this is 1, 2, 3, fourth test of the overnight high. This is why I mark these lines on the chart, because they do matter. They do get respected. So what I'm looking to see is, are we going to push back up over this, or are we going to continue down? If we continue down convincingly, I'm holding some 688 puts that I might jump in on. No break right now. Let's move back here and look at our VIX. Okay. Okay, looks like they're defending it as of right now. Now, if they defend it and we come back up and we start moving to a positive MACD, we may consider some calls here. Let's see what we got. The problem is we don't have a ton of room between the overnight high and the top. All right, back at it. Okay, breaking down again. I don't want to get suckered in here, so I got to be careful. Because like I showed you, we've tested this level 4 times, over, under. So we don't want to get suckered in. We want to be sure that we know which way the move is going. And this move has been going for a while. So we got to be careful there. Okay, looks like it's trying to break down. Nothing yet. So we can see from the morning, it's been a pretty clear upward trend line. Do you see it? If you drew a line from the bottom of these lows, you'd see a clearly upward trend line. So we got to be careful with that until we are sure that this trend is breaking. Bouncing on the 100 right now. Right there, that green line is the 100 period moving average. So no trade for me yet until I see kind of some convincing evidence that we're moving down or up, right? We start moving up, we could pivot real quick into calls. So let's see what happens here. This is the line that they're defending right now. 68.88 on the SPX. There we go. Looks like we're breaking a little bit here. Little green candle forming. Tiny, tiny candles right here. Here we go. Jumping around a little bit. Getting a little bit of volume coming in on that. And it's forming a green candle, so not breaking down just yet. Still haven't come back up over the overnight high. Sitting right at 687.3. We're just under it. I don't know. I might let this move past, this downward move. It's just feeling a little tired. I like this break of the 100 though. We're coming down to test the VWAP, it looks like. So let's see, I'm giving this a minute. It's a little tricky when the move has been going on this long. I don't necessarily want to jump in there, even though it's attractive. It can be trappy. Let's see if we can get this to give us a little turnaround. If we flip the MACD to the upside, we could pivot over to calls here. The VIX is coming up a bit. Okay, a little green candle. Let's see if we bounce here from the VWAP. Google is up nicely today, 3.8%. Really nice. Yeah. All right. A little bouncy here. Okay. I'm glad we didn't take that trade. And it really did look intriguing, right? As we were breaking this overnight high. But look, we didn't come down far enough to really make a profit. We could have made a little bit here, but it just wasn't quite big enough. And the move has been going on. It's a little bit extended. Not saying it can't continue down. It can, but this is where we have to kind of measure our risk. Do we want to jump in here on this old move? Is this move tired? Is it going to bounce? We don't know yet. I like when the move is a little fresher, if that makes sense. Small gain for today. Did not trust the moves with all the news Friday, calling it a day. Just watch. Nice positive week. I'm so glad you had a positive week, BD. Congratulations. I've also had a really good week, and I agree with you. I don't want to give anything back. All right, break in the VWAP here. And it's a great way to go into the weekend with your account green. Am I right? It's a good feeling. All right, breaking down through the VWAP. Pushing back up. VIX is popping a little bit. Back up to 19.6. I'll still consider the put if this VWAP starts to go. Even though this move is a little extended for me, I don't like getting in when the move is this old. Sitting right on the VWAP. No break yet. Let's see if we've got any strength here. Let's zoom out and take a look at the big picture. We are breaking the upward trend for sure. A good break of the VWAP to the downside, I would be willing to trade puts on. Or a good bounce off of the VWAP to the upside, I'd be willing to pivot over to calls. So I'm watching this decision right here. All right, looking a little bouncy here. I'm going to look over on the call side at the 686 calls. Nice bounce off the VWAP there. Let's see if we can get the MACD to curl up. That would be great. Let's see what happens with the close of this candle. All right, I'm going to jump in on the call. Punch it, I'm in. A little pullback down here. So let's see if we can push up through that overnight high again. If we come back down to the VWAP, I'll stop out. Don't love the price action here at the overnight high. We need a nice significant push through it, and it's kind of stalling out here. All right, Guy, you got in before me, or what'd you do there? Must have had a better fill. Nice job, Guy. Excellent. You're welcome. Great job. Think I was in early. No worries. Great job. Glad you got a profit on that. Like I said, if we come back to the VWAP, I will get out because I'm not going to go to 50% on this loss. Today is a little too herky-jerky for me. Trying to claw back from earlier losses today. I feel you, Guy. I do. All right, let's see if we can pop up through this overnight high. Give us a push. Okay. It's trying. Okay, little push through. There we go. All right, I'm out at 4%. Punch it. We could go more, and I think we'll come retest this top, but I did not like this big test here at the overnight high. And they can just as easily pull it back down. So I'm going to take a little win on that. I would much rather take a little win than have this thing climb back down. So I do think we'll head up back and retest this high again. That's what it looks like it wants to do. All right, so that was fun. Fun little lunch money there. There we go. And this is what I mean when I say I'd rather trade a fresh move. So we could have traded the break here of this overnight high, right? I think maybe in here, maybe in through here is where I would have traded it at, what is that, 86.9 to 86.2. Could we have made money on that move? Yes, we could have. But it was a short distance to the VWAP, and then we got the bounce, and it was an old move, right? So by the time we got over here, this move was 2/3 of the way over. We didn't know that. We didn't know it was 2/3 of the way over, but we did know that it was an old move. It was tired. So I'm glad we didn't take that put. I think we could have scalped some money off of it, but the risk isn't worth the reward. So when you're in an old move like this and you've got some levels here that could get respected, because we had reason to believe that we'd bounce off the VWAP, didn't we? Take a look. Bounce off the VWAP, bounce off the VWAP, bounce off the VWAP, bounce off the VWAP. And it happened again. We had reason to believe it would happen again. So we have to always measure the reward to the risk, right? This move might have gotten us 5%, maybe a little more. That's not worth the risk of this happening, right? So let's say we jump into the put. Let's say we jump in late, right? Maybe down here, and then it turns on us. Well, now we're probably down 40% right now. If we took the put over here somewhere, this move would have us down 40, 50%. That's how fast it happens. So I always measure the reward to the risk. What is the risk that we're going to bounce at the VWAP? Well, it was pretty good. I thought it was pretty good. So the new move made more sense to me. The call with the bounce of the VWAP made sense to me. Now I got out right in here where you saw this stall. at the overnight high. We pushed through, and on this candle right here, as we pushed through, I took my lunch money and went home. Now it's continued on, and I think it will come up here and test this top, but I don't need to stay in and wait for that. I'm not swinging for the fences. In my strategy, fast, consistent wins are the name of the game. And I'm up today, you know, 7, 8% of my account already on just a few trades, and they don't have to be big winners. You don't have to swing for the fences to make your goals. And I'm pretty consistently making my goals. So just keep that in mind. Okay. Roberto, any recommendations to get a little more understanding on day trading options? Absolutely, Roberto. Let's talk about that. I think that's a great question. It's a big subject, so I'm only going to kind of scratch the surface here, but I'll do my best to help you understand it. Guy, it went up twice as fast as the previous move down. You're exactly right, Guy. It took what, 11 to, took half an hour to come down here, and it's taken 12 minutes to get right back up. So you're exactly right. It was twice as fast on the way up. All right. Now, if we hit this top here and get a reversal, I'm good with catching a put. So let's watch this. I will say this, the sentiment today, as of now, as of right now, is bullish. So we always want to bear that in mind when we take counter trend trades. If we're going against a major trend of the day, that's riskier. So a put right here is riskier. However, if we've got enough confirmation, I would probably take the risk. If we come up here and hit this high or somewhere in the zone of the high and start getting a reversal, I'd consider a put. And at this moment, the puts are sitting at 689. The 689 puts are what I would be looking at. However, I need to be pretty convinced that it isn't just a little blip and we're continuing up. And I think that could be on the agenda today. That is possible on the agenda. Again, we're dealing with something that's a little unknown, a little uncertain. How is the market truly going to react to these this SCOTUS ruling on the tariffs? That's what I'm trying to gauge right now. Sometimes the first reaction isn't the true reaction. Sometimes you'll get a little fake out in either direction, and it can be minutes, hours, or sometimes days. You can get a fake out of what the market is truly thinking. So we really don't know, is what I'm saying. I really don't know. As of right now, the market's reaction to the tariff ruling being struck down, the tariffs being struck down, is positive. And so as of right now, that's the way that we have to go. We have to trade like water. We've got to follow. We got to be like a stream. We're going around the boulders, right? We need to follow the footsteps of the money. And right now, that's pointing upward. The market is feeling bullish. So that's what we have to bear in mind, especially when we try to trade counter to the trend. That's very much riskier. Much riskier. You'll always make more money trading with the trend. Okay, Roberto, let's talk about options. Recommendations to get a little more understanding on day trade options. It's a great question, Roberto. I will tell you this. I have my Series 7. I am a licensed stockbroker. I've done a lot of study over the years on options. So I've studied a lot of different, in a lot of different ways, right? So I studied to take the Series 7. I worked at Schwab on the derivatives desk, helping advanced traders with their options questions. But I will say this, some of my favorite learning, believe it or not, and I have a ton of books that I've read, a lot of books. But I will say some of my favorite learning comes from YouTube. If you find some people out there that are willing to teach, I'm I'm here teaching for free. I'm trading in front of you for free. Nobody really does that. There are not too many people out there that are willing to share their knowledge for free. And I get that, right? I've spent 20 years doing this, you know, and I hand out what I know for free. But the reason I do that is that, it was, I didn't have anyone really helping me in the beginning before I joined Schwab and got my Series 7 and all of that. I didn't really have mentors or help. And so I want to help as many people as I can. And it's kind of my way of giving back. Now, eventually, I am going to probably monetize this channel, but at this point in time, this is kind of my way of giving back. Okay, so roundabout answer to your question. I can give you a little overview on options right now, but I would say, again, there are a lot of good books out there, a lot of good places to study. You can find some really good information on YouTube. And so I would look at options for beginners. I'm just going to cover, I'll give you a brief overview of understanding options. Gavilan, have you written any books? I have not, Gavilan, I have not. I do a lot of personal coaching and training. And I do have some curriculum, but I have not written a book. It's actually an interesting idea. I don't know where I would find the time. But it's a very interesting idea. I would like to do that. It's good to record the knowledge that people gain so that we can pass that along to other, people that are starting out. Okay, here we are at the top. And let's see if we get a reversal here or we continue up. So in terms of trading options, it's a universe. Roberto. So if you have, can you narrow down your question just a little bit for me and see if I can help to get you a better answer? Because trading options is a whole universe, and you have to start with the understanding of what is an option. And I will give you an example of how I describe options. Roberto, I know you're not brand new to trading options, but I will give an example of what I think options, an analogy of how to understand options if you don't understand them, if you're brand new to trading. I often use this analogy. So let's say you're selling a house. $500,000 you're selling this house for. I come along and I say, nice house. I'd love to buy it. I think it's going up in value. I think this house is going to be valuable. Will you just sign a contract with me so that I can be the buyer? And don't sell it to anybody else. And I'll come back in a month and I'll give you the money for the house. Will you do that? The seller of the house might say yes. I say, I'm going to give you $1,000. Just sign the contract with me, and I'll give you $1,000. And maybe the seller of the house says, yes, I'll take that. I'll hold the house for $1,000. But when we get to the end of the month, if you have not bought this house, I'm keeping your $1,000. And I say, okay, fair deal. Someone comes along and says, Mel, I like that house. I know you've got a contract on it. If I gave you $1,500, would you give me the contract? And I say, yeah, okay, I'll take a quick 500 and I'll look for a different house. That's cool. That's great. So I give you the contract to now buy the house for 500,000, and I put 500 in my pocket and I go look for another house. In essence, that contract on the house, that is the options market. And the options market is enormous, trillions of dollars. Guess what? Nobody's buying the house. The house represents the underlying. So when we trade options on the SPY is the underlying stock. The option price is derived from the price of the stock. That's why we call them derivatives. And we are looking like we're coming down. I'm going to load some puts here. I've got the 689s already loaded. I'm not getting in yet. I'm just watching here. Okay, so SPY is the house, right? The option contract is based on the current today's price of the house. Nobody buys the house. somebody else comes along and buys that contract for 2,000 because the value keeps going up. Nobody bought the house. All we're doing is trading these paper contracts when in my analogy of the contract over the house, right? That's the options market in a very simplified nutshell. There, nobody's buying the house. We're not using options. Some people are. We're not using options to buy stock. You can use options to buy stock, but that's not what we're doing as options traders. We're trading the paper there's nothing changes hands. It's all digital. It's all smoke and mirrors. I never hold anything. I spend money every day, lots of money every day to buy options, and I never hold anything in my hand. It's all smoke and mirrors. We're trading digitally and nobody is buying the house. Okay. So hopefully that makes sense, Roberto. That's a super simplified analogy. And I know you probably understand that part about options, but for those people who are just beginning, that's a good way to think about options. Nobody's buying the house. Okay. All right, Roberto, I'm asking the strategies that work well. I've been using fair value gaps, but need more help. You bet, Roberto. Fair value gaps, a lot of people use them. There are a lot of different ways to use them. Let's see. So let's talk about what is a fair value gap. And basically, let me zoom in here. And I'll talk about some different strategies. Roberto, you can see the strategy that I'm using, and you can kind of understand it just by watching me trade. I'm using the MACD, I'm using moving averages, I'm using the VIX. So all of these things I'm using together, and I'm using levels. So I'm using several different things. Okay, we're beating this top right here. So no puts for us right now. We're still kind of at this top level. So let's watch and see what we do here. But a fair value gap, here's an example of one right here. A fair value gap is a series of 3 candles where the first candle and the second candle, third candle, do not meet. Okay, let me zoom in a little bit more and you can see exactly what I'm talking about. In this series of 3 candles, here's the first candle, here's the second candle, here's the third candle. The close of the first candle is right here where my cursor is. The open of the third candle is right here where my cursor is. This right in between here is what we would call the fair value gap. I know you know that, Roberto. I'm just brushing up for people who don't know what the fair value gap is. There are many ways to trade a fair value gap. Some people will say if we are gapping up, then follow that direction. Some people would say wait for a reversal for this gap to fill, because a lot of times the fair value gaps do fill. There are other different ways to use fair value gaps, but that's a real simplistic overview. The strategies I use, Roberto, are based on the fact that I'm trading on a 1-minute chart. So I'm trading in and out very quickly. And I'm looking at the MACD, the moving averages, the VIX, and the, what did I say? Levels. Hello, levels. Okay. So you see, when I trade, I am aware of these levels all the time. Just like when we were thinking about puts right here at this overnight high, I'm aware of this level. The other thing I was aware of on this trade is the MACD was old. It was tired. This move had been going on for a little too long. So what I wanted was a new move. I wanted the MACD to roll over, and we got that. And we jumped in, and we were aware of this level right here. So I jumped in with the MACD after the MACD turned green. I jumped in right in here and then waited for this break of the overnight high. And I got right out when it broke, because sometimes that gets recaptured. So that's an example, Roberto, of how I use indicators on the 1-minute chart to figure out my entries. Okay. So it's a lot of things, right? So I start with my big picture my bias on the day right now, the bias is bullish, right? So we have to bear that in mind. Then I kind of come down to levels. Where are the important levels? Well, I've already kind of showed you where they are. And then within the levels, where is the MACD rolling over? And is it with the trend or is it against the trend? That makes a difference as well. So those are some of the ways that I'm using indicators to trade options. And hopefully that helps, Roberto. I hope it does. Okay, so we're getting close to the end of the stream. We took a quick win here just for a little, well, Guy did better. He got a nicer win than I did, but we took a quick win here. That was nice. Let's talk about how to trade today. Roberto, yes, thank you. You're so welcome. Let's talk about how to trade the rest of the day. So zoom out. We'll look at this day again. Here we are. By and large, this is still an upward trending day. Even though we broke this upward trend right here, we broke it. We came right back in and got inside the trend again. That's where we're sitting. I'll show you how to kind of draw a line real quick. The idea is you want to get a couple of touches. 1, 2, 3. 3 touches right here. That's kind of roughly where I would draw the line. And the line is in the eye of the beholder. They don't have to be perfect, but we've got a touch here, 1. It touches here, 2, touches here, 3, and then it breaks here on the 4th. Now, you can trade the break of the trend line because we had a break of the trend line and a break of the overnight high. That's what we would call like a confluence. So you could have traded that. And again, that trade probably would have made a few percent. But that's how I kind of watch the trends. Now, we're not quite back inside that trend line. We could broaden it, right? We could kind of move it over and call this, the new trend. It's that's a little more shaky ground right there if you did it that way, but you've got only 2 touches. But basically, the main point is we are moving upward. Okay, now here's our top. We're rounding off. Now we're getting some downward movement. The MACD is starting to brighten up. Could we justify a downward trade here? Maybe. We might be able to. The top is we've kind of hit this same top 3 times now. 1, 2, 3 times on the top. That's what we call a triple top. It is usually bearish if we reject off of this top one more time. So if this truly is a rejection, that's bearish and we could trade to the downside. So trading plan for today, follow the trend, take the calls when they appear, like we took this one here. Any break to the downside is riskier. Be careful with that trade. Take quick wins. And if we come and push down through the VWAP, then we are looking a little bit more bearish. I'm open to trading puts and calls today, but I prefer to stay with the trend. Triple crown, says Guy. Yeah, you're right. All right, my friends, can you believe we're at the end of the stream? Has it been an hour? Thank you guys so much for joining. Thank you for jumping in here. Thanks for your questions, everybody. I really, really appreciate it. Your questions and your comments are always, it's really helpful to have company to trade with. Trading is a lonely profession. So I'm grateful to have you guys here. And I hope that you guys got something out of it as well. We'll be back on Monday at 11 a.m. Eastern. Thank you for joining, and we will see you next week. Have a great weekend. Enjoy your friends and family. Bye for now.